Good afternoon this Tuesday, August 20th. The grain trade, well, the corn and soybeans holding up decent when you consider the big rally yesterday. Pro Farmer Tour underway. The yield tweets usually get throughout the week drive the price of grain down. Well, we were up strong on Monday for corn and soybeans on this dry weather concern building through the end of the month that could take the tops off of the yields there currently are seeing the prospects for. So we'll see here how Wednesday holds together for corn and soybeans unless we revert back to the same old sell during all these tweets from the Pro Farmer Tour. Now the cattle trade, there too, we had seen some massive selling develop again today for the second day in a row as the elevator ride to the downside continues to accelerate. We'll have more about that. But first, a point of interest here to note on the grain trade. You've probably heard about the Canadian rail stoppage that could possibly occur Thursday at midnight as the Canadian rails will go on strike. Now, this is a big deal for the U.S. because the spring wheat from North Dakota, South Dakota, Minnesota, it rolls up through Canada to get to the ports out west. And so this is a problem. My spring wheat has not been performing as good as the bounces we're seeing over the past few sessions for the Minneapolis and Chicago wheat into the close, or for the, I should say, Chicago and Kansas wheat contracts into the close. So this will be closely watched. This occurs Thursday at midnight if President Trudeau out of Canada does not step in and help bring a fast resolution. So going to the cattle trade, well, today October cattle again collapsing, falling through not only the Friday lows, but the lows made tweaks go on August 8th, setting up a massive bar down here to the downside. And as you can see, we've been looking for a wave two, wondering if it would make a 50% or 62% retracement. Obviously, hindsight, it stopped pennies shy of a 50%, and we're now moving lower from a wave two into wave three of a larger wave three to the downside. There'll be a wave four bounce and then a final five down in the three. Now, something to note that halted today's decline, but I don't know if it'll work tomorrow, is this daily continuation chart moving average we've shown you in the past. And we've been discussing 175 could be a low. Today's exact low, 175. Now, whether it bounces will be important. Now, we've spiked it before, or we've beaten down through it like we did last December sharply, which if we set this up again, I've got a few points to show you we could go to. So on the October cattle contract, as you can see, we have this trend line that goes back to the December lows. That is at 173. Now we can also measure the first leg of wave two, which is wave one down here. We can measure that and we move this over to the next point and we can drop it on the top of wave two. Well, this gives us a challenge that could break down to the 170 range. If we fall through 175 today's low, then it's on to 173 and a half or so. If you fall through that, well, I'm sorry to say this, they're probably going to print 169.90 just to do it. And this still, at this price, would not even be taking out last December's low for the October cattle contract. But keep in mind, wave threes are typically longer than wave ones. So we always show the equal measurement just to give an idea what we know it's likely to get to. So 170 is a likely target, and since the cattle market peaked on September 13th of last year, the anniversary date comes in at September 15th this year. I said there's a likelihood of an anniversary low that wave three could probably finish itself off at the mid-September point as we pretty much wipe out the industry here. Whoever didn't hedge or take out LRPs and bought those expensive spring cattle without hedges, it's a problem. And this happened in 2014, and you just knew it was likely to happen again this year. Feeder cattle September, which was lead contract last week, got up right to our purple moving average. We told you about 244 to 246. Stopped right in the center of it, right at this moving average. That's how we came up with it. Well, as of today, October now becomes spot contract. Got down to just under 230 before turning a little bit higher into the close off those lows. We are targeting 223 to 225 on the weekly continuation chart. That's the expectations. If we do this length, measure to this length, well, then you know what that means. That means new low, and that's well into the teens, probably low teens. So how do we read today's action? Well, if we look at October feeders, which didn't even do a 50% like live cattle, they only did a pathetic 25% retracement, wave four, which tells you how weak they are. We can start doing some measured move theory here. Measure first leg down, and then measure it to here. And we actually get today's low, near 240, but that doesn't mean we're done. This is wave five of wave three, but inside of wave four to wave five up three subdivides. 1, maybe a wave 2 bounce, a 3, a 4, and then a finishing off of a 5. These are not to price scoping, but I'm just showing the wave count potential. So a bounce probably is in the cards, maybe back to what we fell through here in this 235 range is a target short term, maybe even a little higher yet, but this would be a wave 2, and then a wave 3 would be disruptive right around next week into Labor Day. So the elevator is going down. The question is, are we going to gain speed, which statistically has that probability because you're in wave 3 after all. But midweek bounces can happen and maybe might happen tomorrow for some that want to look for a bounce to sell into. The dollar breaking down. This is the weekly chart. This is now our 4th week into the breakdown of a trend line support. The lowest price of the year was the first trading week of the year at 101.05. We are almost there. You take out 101, then you challenge the last week of December low near par. Bottom line, we start falling through par. We're going to get the attention of the grain trade, which the metals already have seen this, but the grain trade can start taking note with the short saying, why do I want to be short a grain market when the dollar isn't as strong as it used to be, especially when they started raising interest rates, and now the talk of rates declining continues to create this sloping action to the dollar. This is going to affect the grain trade someday, and maybe sooner rather than later. Our exports will dial up this winter and are already looking pretty decent for corn when you consider that we're the cheapest corn in the world, well under Ukraine, and we're comfortably under Brazil. Soybeans today, well, nice little bounce of 30 cents off of the lows made just last Friday. What's interesting is the prospects of wave 4 going up to the blue line, which has been consistent since this decline of getting touched before we revert lower, and it's currently just above $10, is that today marked a 5-wave advance. 1, 2, 3, 4, 5. That's kind of friendly. Now the bears will say, well, this is an A, B, C, sell it, she's going to drop. Well, maybe, but I think C is going to extend it. It could be an extended wave C, where C can do a 1-6-1 of the prior. Since this 5-wave occurred, here's wave 5, a little A, B, C down, and then a further extension, all here during Pro Farmer Week. Maybe it's the dryness that is forecasted for the Midwest through the opening of September that is spooking that the tops are going to come off this 53 bushel expectation nationally that could maybe dial back to 52. There goes 86 million bushels off the carryout if we took a bushel off and just went with a good old 52 bushels to acre. We shall see. I'm just saying this is how these wave counts could develop. But just the same, as wave 4 completes itself near the $10 range or $9.95 to $10.02 range, you would still get that final wave 5 completion, maybe down into Labor Day. Corn turning lower today, but nothing substantial. It could still be higher tomorrow. Trying to work a wave 2 in here, and then we would finish a wave 3, a 4, and a final 5 somewhere into September. Now, I will mind you that in big crop years, I could go back 30 years and show you 2 years where we bottomed by mid-August, and we turn up. And guess what one of those years was? 2020. Our yields were the highest on the August crop report. Every report forward, the yields declined and exports went up, and the price of corn just exploded in 2020. So if we close above 410, I can start erasing all of these things, and we put a big old 5 right here, and we're done, and then we start a wave count to the upside. So we're watching and learning from the market as it wants to talk to us. Wheat, this is interesting. This is Chicago wheat. Here is your March lows. Here is the challenge of the March lows, but holding on a closing basis. Then we get a little trend line going here. And every time we drop below that trend line, we challenge the March lows, and we come back and close right at or above the trend line. One of these days, the market's going to have the kahunas to close above a previous high, and then we're going to have short covering at the Banji from the index funds, and maybe it's tied to Ukraine bombing in Russia or Russia bombing on Odessa or somewhere, making severe damage to some export systems. Then that's where this wheat gets wild to the upside. And we do know we're in the number 1 list to buy wheat from right now. Once Russia has seen its price setting, we could capture some sales as well. As the spring wheat side of the equation, our sales are going to be likely because of the drought that occurred and damage from too much rain in the Russian spring wheat area. So we're going to have the spring wheat this year, not so much Russia. Russia, though, has plenty of winter wheat as of now. And the seasonals we'd like to take a look at, let's remember that we are going through probably one of the worst time windows. From August 5th through September 10th is this window where wheat should be collapsing. Well, I didn't show you that collapsing here over the last time window. Let's see here. Let's take a look. here is August 5th. And unless they dial it up here starting tomorrow or the next few days, the collapse hasn't occurred. Maybe I spoke too soon. Maybe we start breaking tomorrow. But for now, the collapse has been a little disappointing to the bears, and they're going to start getting antsy and wanting to cover these shorts as they're losing events to buy into. Then final look of crude oil. Well, our wave 2 stopped at 68% retracement. We now have a wave 1 to the downside from our highs back last year. And then we had our wave 2 rally, starting wave 1, and then another wave 2, and starting another wave 1. And now we have another wave 2, all in succession moves. This is a 1, 2, 3 on the blues. And you can just keep breaking these down. Wave 2 occurred. We had an option. We had an expiration of the August contract occurring today. Actually, it was a September contract. So we wouldn't be surprised at getting a little bounce in here off of that. And then another decline as we work 5 waves to the downside of wave 3, of wave 3, of wave 3, which could potentially go down to $60, especially if no hurricanes even come close to the Gulf anymore through October 15th. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.